What is the best time to trade? Everyone asks the same question. Most videos give you a simple answer, but the real answer is more interesting than that. Stay with me. Hi, this is Marjan, and I use volume profile to track institutional order flow in my tradings. So everything I share here is rooted in how big players actually move markets. Let's get into it. Markets are not equally alive 24 hours a day, and as a volume profile trader, I see this more clearly than most. Here's what I mean. When volume is low, your levels do not disappear, but the market's reaction to them becomes completely unpredictable. Price can spike through a high volume node and reverse instantly, or stall at a low volume area for no good reason. Not because your analysis was wrong, but because there simply aren't enough participants to create a clean, decisive move. I see this constantly in the profile. During dead hours, the shape is thin, unstructured, no clear point of control, no defined value area. There is no institutional footprint, just some noise. But during peak hours, the profile fills out. Heavy nodes form at prices where real decisions were made. Value area is clean, point of control is clear, and when price comes back to test those levels, it reacts. That's the difference that the timing makes. It doesn't change your levels, it changes how reliably the market respects them. And for a volume profile trader, reliable reactions are everything. Now let's walk through the sessions quickly. On TradingView, to separate the trading sessions from each other, you can use Trading Sessions Indicator. It's completely free. Just search it directly in the Indicators tab, and as you can see on my chart, each session is color-coded separately. Asian session, London session, and New York session, all clearly marked. Let's start with Asian session, midnight to 9 a.m. GMT. It's quiet, low volatility. Markets tend to range, good for normally range traders. For me, I watch where price closes in Asia because it often sets the range that London will react to. London session, 8 a.m. to 5 p.m. GMT. This is where things get serious. London accounts for around 35% of daily Forex volume. Trends begin here, breakouts follow through, and real volume nodes start forming on the profile. This is when institutions are active, and you can feel it on the chart. Now, New York session, 1 p.m. to 10 p.m. GMT. US equities come alive, and this is when major economic data hits. CPI, NFP, Fed decisions, any important decisions. So, this is not my favorite. My favorite is the overlap. London, New York overlap. So it is from 1 p.m. to 5 p.m. Both markets active simultaneously. Tightest spreads, highest volume, strongest trends, the heaviest volume nodes of the day get built here. And those nodes become key reference levels for the next session and even for the next day. So, for scalpers, this is the prime time, 1 minute and 5 minute charts. You can trade with the trend, use volume nodes as targets. Don't fight with the direction here. For day traders, 15-minute chart is ideal. You can enter on pullbacks to the point of control. Target is the edge of the value area. And for swing traders, you can watch the 1 hour and 4 hour charts. A strong close outside the value area during the overlap is one of the cleanest signals for a continuation move into the next day. And one thing that applies to everyone, regardless of your style, during the overlap, never fight the volume. If the heaviest node of the day is forming at a certain price, the market is telling you that's where the real consensus is. So you just need to respect it. Now, timing isn't just about hours. Which day you trade matters just as much. Tuesday, Wednesday, and Thursday are your strongest days. Institutional players are fully active. Trending moves have real volume behind them, and the profile shows it. Heaviest nodes, cleanest reactions, clearest point of control. And if your strategy is based on volume profile like mine, these 3 days are where your edge is sharpest. The value area is well defined, point of control holds as a magnet, and when price reacts to a high volume node, it actually follows through. You're not guessing, you're trading with real institutional footprint behind you. This is the environment volume profile was built for. Monday, I treat as an observation day. Volume is light, the profile looks thin, and the market is still finding its direction. I watch where price is trading relative to last week's value area and wait for conviction before I enter anything. Friday, on the contrary, is one to be careful with. Position squaring before the weekend creates moves that look like breakouts but have no real volume behind them. Shallow nodes, no institutional commitment, and there's always weekend risk. A gap against you on Sunday night is a real possibility. My Friday rule is simple. Higher bar to enter, smaller size if I do, and nothing open that I'm not comfortable holding over the weekend. One thing most traders underestimate: the economic calendar. A perfect setup can be wiped out in 30 seconds by a surprise data release. Check Forex Factory or investing.com before every session. Know what's coming. It takes 5 minutes and saves you from a lot of painful surprises. Now, after everything I just told you, here's the honest truth. Best time to trade depends entirely on your own setup. A scalper and a swing trader don't live in the same world. I use volume profile to track institutional order flow, so naturally I gravitate towards London and the overlap. That's where the real volume is for me, and my strategy needs that to work. But your answer might be different, and that's the point. The question was never when is the market best. It was always when is the market best for what I do. Build your strategy first, then let the clock serve it. If this video was useful, subscribe. Every week, I break down real setups using volume profile and institutional order flow. See you in the next one.